What would happen if you gave ChatGPT $100 and told it to invest in the stock market? Would it lose everything? Would it make you rich? Or would it do something completely unexpected? Well, a 17-year-old high school student just answered that question, and the results are absolutely shocking. This isn't some theoretical experiment. This is real money, real trades, real results. And it's currently going viral on Reddit with thousands of people watching every single move. In just 5 weeks, ChatGPT has done something that's making professional investors sit up and take notice. I'm going to show you exactly what happened, break down the strategy ChatGPT is using, reveal the surprising results, and answer the big question: could AI be better at investing than humans? Stay with me because the numbers are going to blow your mind. Let's get into it. Chapter 1. The teenager who started at 0.45 to 15. Okay, so let's start with the mastermind behind this experiment. His name is Nathan Smith. He's only 17 years old, and he's a high school student. Not a Wall Street trader, not a finance professor. Just a curious teenager who wanted to see if ChatGPT could actually make money in the stock market. Nathan goes by the username OpenArcher7341 on Reddit, and his experiment has absolutely exploded online. Why? Because he's doing something that nobody has really done before at this scale with complete transparency. He's letting an AI make every single investment decision, and he's sharing all the results publicly. Here's how it works. Nathan gave ChatGPT a budget of exactly $100. That's it. Not thousands. Not tens of thousands, just $100. Enough to test the concept without risking serious money. And then he set up some rules, which we'll get to in a minute, and he let ChatGPT loose on the stock market. But here's what makes this so compelling. Nathan isn't just posting results and calling it a day. He's documenting everything. Every single day, he feeds ChatGPT the current portfolio status, and ChatGPT tells him what to do. Buy this stock, sell that one, hold this position. Nathan then executes those trades himself, but make no mistake, ChatGPT is making 100% of the decisions. Nathan publishes weekly reports on Substack where he breaks down every decision, every trade, and every result. He's also shared all his data, including the exact prompts he uses, on GitHub. That means anyone can see exactly how this experiment works. This level of transparency is incredibly rare, and it's part of what makes this experiment scientifically interesting. And get this, the experiment is designed to run for at least 6 months. We're currently at week 5, which means we're not even halfway through. But already, the results are creating massive buzz in both the AI community and the investment world. Chapter 2. The experiment setup and rules. Alright, so before we dive into the juicy results, we need to understand how this experiment actually works. Because Nathan didn't just give ChatGPT free rein to gamble his money away. He set up specific rules and parameters to make this both safe and scientific. First and most importantly, Nathan is using the free version of ChatGPT. That's right. Not ChatGPT Plus, not some premium AI tool that costs thousands of dollars. The same free ChatGPT that you and I can access right now. Although there is one exception, which I'll explain in a moment. Second, Nathan focused on microcap stocks. These are companies with a market capitalization of less than $300 million. Now, why microcaps? Because they're volatile. They move fast. They can deliver huge gains, but they can also crash hard. It makes the experiment more interesting and tests Chat's ability to handle high-risk situations. Third, Nathan implemented a stop-loss strategy. This is crucial for risk management. Basically, if any stock drops below a certain threshold, it automatically gets sold to prevent catastrophic losses. This is investing 101, and it's smart that Nathan built this safety net into the experiment. Fourth, every single day, Nathan updates ChatGPT on the portfolio status. He tells it the current value of each position, any relevant market news, and then asks ChatGPT what actions to take. ChatGPT analyzes everything and provides specific instructions. And here's where it gets really interesting. Once per week, Nathan uses Chat's deep research mode. Now, this is a feature from the paid version, but here's the thing, the free version of ChatGPT allows you to use deep research a limited number of times. So Nathan is staying within the bounds of the free tier, but he's maximizing what's available. Deep research is powerful. It allows ChatGPT to perform a comprehensive, in-depth analysis of the entire portfolio. It looks at market trends, evaluates company fundamentals, assesses risks, and suggests strategic adjustments. Think of it like a weekly portfolio review that a professional financial advisor might do. Nathan executes all the trades himself through his brokerage account, but again, he's just the hands. ChatGPT is the brain making every decision. So those are the rules, clear, transparent, designed to test whether free AI can actually beat the market. Chapter 3. The shocking results. Alright, here's what you've been waiting for. After 5 weeks of letting ChatGPT control the investments, what actually happened? The portfolio is up 20.1%. Let me repeat that. 20.1% growth in just 5 weeks. ChatGPT took $100 and turned it into approximately $120 in just over a month. That's not just good, that's exceptional. To put this in perspective, let's compare it to the S&P 500, which is the standard benchmark for the US stock market. During the same 5-week period, the S&P 500 delivered much more modest returns. ChatGPT significantly outperformed the broader market, but wait, it gets even better. At the end of week 4, the portfolio had actually peaked at plus 25.4% growth. That's right, ChatGPT had turned $100 into $125 in just 4 weeks. That's an incredible return by any measure. However, and this is important, week 5 saw a pullback. The market had a difficult week, and the portfolio's value dropped from that peak back down to 20.1%. This is actually really instructive because it shows that ChatGPT isn't immune to market volatility. When the market struggles, a managed portfolios struggle too. But here's what's fascinating. ChatGPT didn't panic. It didn't make emotional decisions, it analyzed the situation, adjusted the strategy, and continued managing the portfolio according to its risk parameters. This is one area where AI might actually have an advantage over human investors. No fear, no greed, just data-driven decisions. So, what stocks is ChatGPT actually investing in? Remember, we're focused on microcaps, so these are small companies that most people have never heard of. Nathan has shared all the specific positions on his GitHub, and you can see exactly what ChatGPT is buying and selling. The portfolio includes a diverse mix of microcap stocks across different sectors. ChatGPT has been actively trading, not just buying and holding. It makes decisions based on daily market movements, news events, and its weekly deep dive analysis. Some positions have been huge winners, others haven't performed as well. But overall, the strategy has been profitable, and that's what matters in investing. You don't need every trade to be perfect. You just need your winners to outweigh your losers. Chapter 4. How ChatGPT makes investment decisions 6 o'clock to 7:30. So how exactly is ChatGPT making these decisions? What's the process? Let's break it down because this is where things get really interesting. Every day, Nathan provides ChatGPT with an update, current portfolio value, individual stock performances, relevant market news, cash available for investment. Then he asks ChatGPT what actions to take. ChatGPT doesn't just randomly pick stocks. It's considering multiple factors. First, it performs technical analysis. It looks at price charts, identifies trends, evaluates support and resistance levels. All the things a day trader would look at. Second, it considers fundamental analysis. Even though these are microcap stocks, there's still information available about company financials, management, industry position, and growth potential. ChatGPT analyzes all of this. Third, it evaluates risk. ChatGPT looks at the overall portfolio composition. Is it too heavily weighted in one sector? Is there enough diversification? Should positions be trimmed or increased based on current risk exposure? And here's what makes the deep research sessions so powerful. Once a week, ChatGPT goes much deeper. It looks at macroeconomic trends, interest rate movements, sector rotations, emerging market opportunities, potential risks on the horizon. It's essentially performing the kind of comprehensive analysis that professional portfolio managers do. What's remarkable is that ChatGPT provides reasoning for every decision. It doesn't just say buy this stock, it explains why. It shows its logic. It demonstrates how the decision fits into the overall strategy. This transparency is something many human financial advisors don't even provide. Nathan has shared these prompts and responses publicly, and they're fascinating to read. You can literally see Chat's thought process, how it weighs different factors, how it assesses risk versus reward, how it adapts to changing market conditions. Chapter 5. But is IT really safe? The risks now before you rush off to give your life savings to ChatGPT. We need to talk about the risks. Because while these results are impressive, there are some serious concerns and limitations we need to address. First, microcap stocks are incredibly risky. Yes, they can deliver massive returns, but they can also crash spectacularly. These are small companies with limited liquidity, less regulatory oversight, and higher failure rates. Nathan's stop-loss strategy helps manage this risk, but it doesn't eliminate it. Second, 5 weeks is an extremely short time frame. In the investment world, that's basically nothing. You can't draw major conclusions from 5 weeks of data. Market conditions change, economic cycles shift. What works in one environment might fail in another. We need to see results over 6 months, a year, ideally several years before we can really judge whether this approach is viable. Third, there's a concept called survivorship bias. Nathan's experiment is getting attention because it's working. But how many other people tried similar experiments and lost money? We don't hear about those. This is important to keep in mind. Success stories get amplified while failures fade into obscurity. Fourth, ChatGPT has limitations. It doesn't have real-time market data. It relies entirely on Nathan to provide updates. It can't predict black swan events or market crashes. It's trained on historical data, which means it might struggle with unprecedented situations. And it can make mistakes. AI is not infallible. Fifth, ChatGPT itself warns against using AI as a therapist or for critical decision-making. The article specifically mentions that AI can encourage delusional episodes and shows problematic flaws when used for therapy. Financial decisions are similarly high stakes. Should we really be outsourcing investment choices to an AI that's not specifically designed for this purpose? Sixth, there are regulatory and ethical questions. Is it legal to use AI for investment decisions? Are there disclosure requirements? What happens if things go wrong? Who's responsible? These questions don't have clear answers yet because the technology is moving faster than regulation. And finally, there's the emotional side. Investing isn't just about numbers. It's about goals, time horizons, risk tolerance, and personal circumstances. Can an AI really understand these human factors? Probably not. Chapter 6. What this means for the future of investing. 9 o'clock to 10:30. Despite all these risks and limitations, this experiment tells us something important about where investing is headed. And it's not just about ChatGPT, it's about AI in finance more broadly. First, this demonstrates that AI-powered investing is becoming democratized. Right now, sophisticated trading algorithms and AI systems are available primarily to hedge funds, institutional investors, and wealthy individuals. They cost millions to develop and maintain, but if a free tool like ChatGPT can generate competitive returns, that changes everything. Suddenly, average people have access to AI-powered investment strategies. Second, it shows that AI has real potential in financial markets. ChatGPT isn't designed specifically for trading. It's a general-purpose language model, yet it's outperforming the market. Imagine what dedicated financial AI could do. AI systems specifically trained on market data with real-time information feeds and optimized trading algorithms, the potential is enormous. Third, this raises serious questions about the future of financial advisors and portfolio managers. If AI can match or exceed human performance, what's the value proposition of paying fees to human advisors? This isn't just theoretical, it's happening right now. The financial services industry is already being disrupted by robo-advisors and algorithmic trading. This experiment suggests that disruption is accelerating. Fourth, it highlights the importance of transparency and open research. Nathan's experiment works because he's sharing everything. The methodology, the data, the results. Both successes and failures. This level of openness should be the standard for AI systems, especially in high-stakes domains like finance. Fifth, it demonstrates both the capabilities and limitations of current AI. Yes, ChatGPT can analyze data and make decisions, but it needs human oversight. Nathan sets the rules, executes the trades, monitors the results, and makes sure nothing goes catastrophically wrong. The human element remains crucial, at least for now. Looking ahead, we're going to see more experiments like this. More people testing AI in different investing scenarios. Different time frames, different asset classes. Different risk profiles. All of this research will help us understand what AI can and can't do in financial markets. The investment industry is already pouring billions into AI development. High-frequency trading has been around for years. But this is different. This is accessible AI that anyone can use. That's potentially revolutionary. Chapter 7. Could you replicate this experiment? 10:30 to 11:30, so here's the question I know you're thinking. Could you do this? Could you replicate Nathan's experiment? The short answer is yes. Technically, you absolutely could. Nathan has shared all his prompts and methodology on GitHub. You can literally copy his entire approach step by step. You have access to the same free version of ChatGPT. You can open a brokerage account with $100 or whatever amount you're comfortable with. All the tools are available, but the real question is, should you do this? And that's much more complicated. If you're thinking about trying this, here's my advice. First, only invest money you can genuinely afford to lose. Treat this as an educational experiment, not a retirement strategy. If losing $100 would cause you financial stress, don't do it. Second, understand the risks thoroughly. Microcap stocks can be extremely volatile. They can drop 50% or more in a single day. Make sure you have stop-loss protections in place like Nathan does. Third, don't blindly follow AI recommendations. Even if you're replicating Nathan's approach, do your own research. Understand what stocks you're buying and why. Know what you're getting into. Fourth, be disciplined. Nathan's success comes partly from following his rules consistently. He doesn't panic when things go down. He doesn't get greedy when things go up. He sticks to the strategy. If you're going to try this, you need that same discipline. Fifth, document everything. Keep detailed records of every decision, every trade, every result. This helps you learn from the experience regardless of whether you make money or lose it. And most importantly, Remember that past performance absolutely does not guarantee future results. The fact that Nathan's portfolio is up 20% after 5 weeks doesn't mean yours will be. Market conditions change. Timing matters. You might get completely different results even following the exact same strategy. Investing always involves risk. AI doesn't change that fundamental truth. It just changes how decisions get made. Conclusion, so let's wrap this up. A 17-year-old high school student named Nathan Smith gave ChatGPT $100 and asked it to invest in microcap stocks. 5 weeks later, the portfolio is up over 20%, significantly outperforming the broader market. The experiment is going viral on Reddit, and it's raising fascinating questions about the future of AI and investing. Is this proof that AI is better than humans at investing? Not necessarily. 5 weeks isn't enough data. The sample size is tiny. Microcaps are volatile. There are lots of caveats, but it is proof that AI has real potential in financial markets. That free, accessible AI tools can generate competitive returns. That the barriers to sophisticated investing are coming down. And that the financial services industry is facing a wave of disruption that's only going to accelerate. Nathan's experiment still has months to go. Anything could happen. The portfolio could double. It could crash. We simply don't know, but that's what makes this so compelling. We're watching a real-world test of AI capabilities unfold in real time with complete transparency. Personally, I think this is just the beginning. AI is going to transform investing just like it's transforming every other industry. The question isn't whether it will happen, but how fast and what it will look like. Will ChatGPT replace financial advisors? Probably not entirely. But it will change the industry fundamentally. It will force human advisors to add value in new ways. It will democratize access to sophisticated strategies. And it will spark important conversations about regulation, ethics, and the kind of future we want to create. I'm going to keep following Nathan's experiment closely over the coming months. I encourage you to do the same. Links to his Reddit posts, Substack reports, and GitHub data are in the description below. Let me know in the comments what you think. Would you trust ChatGPT with your money? Do you think AI will revolutionize investing? What opportunities and risks do you see? I genuinely want to hear your perspective. If you found this video valuable, please give it a thumbs up and subscribe to the channel. I cover AI, technology, innovation, and how these forces are reshaping our world. Hit the notification bell so you don't miss future videos. Thanks for watching, and I'll see you in the next one.